Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very nice day in the markets today, and hopefully you had a very beautiful weekend as well. In today's action, we had a little bit of a pullback day, giving back some of the gains that we had on the Friday session. The SPY, the QQQ, and most of your major indexes unfortunately ending in the red. Now, with a red day like today, you might expect that there was some news possibly to bring the markets down. Well, as a matter of fact, no. Today was just a very normal day of price action. We did have some pretty low volume, though, on the SPY, and pretty low volume as well on the QQQs. A lot of apprehension is possibly on the horizon in terms of the results that are going to be coming out Wednesday afternoon. NVIDIA earnings, to be specific, and thereafter, later on in the week, on the Thursday session, we get GDP, and on the Friday session, we get the Fed's preferred inflation gauge, which is going to be the PCE inflation numbers. And I know what you're probably saying right now. Every single week, out of the last 3 weeks, it seems as though there is one piece of news that could possibly sway the direction of the markets in a very big fashion, and this is true. However, you might remember the presentation that I gave approximately 3 weeks ago at this point in time when we talked about the results of the non-farm payrolls and how the markets reacted to it. There was a clear shift from the market that we had prior to the non-farm payrolls, which was a clear market narrative environment, and the environment that we've had ever since. And it went something like this. The pre-Friday, which is referencing the non-farm payrolls, this was a period in the market where up until that point, we had very good everything. We had very positive bullish seasonality. We had earnings reports to look forward to. The tariffs were effectively paused. The jobs were okay. Inflation was also okay because the tariffs were paused. And the Fed was saying that policy was restrictive, but not hurting the economy. As a result, they were staying put. What happened since that Friday session, the non-farm payrolls a few short weeks ago? Well, the narrative became a little bit cloudy, and as a result, the price action ever since then has been cloudy, and news reports and sentiment have kind of eroded the overall bullishness that the market possibly once had from the April lows all the way through to those July highs. Since then, we are not anymore in bullish seasonality periods of time. As you can see here, the fall period is traditionally a low volume and choppy period of time for the markets. We also don't really have any more earnings to look forward to other than really NVIDIA, but earnings season has largely been concluded about 2-3 weeks ago at this point. The tariffs are no longer paused and are leading to possible inflation. As we can see here, CPI, I said if CPI was hot again, that's 3 months. It did come in relatively hot, and that is 3 months of a higher trend. The tariffs, the jobs narrative also right now is not okay. For the past 3 months, we've been seeing that job creation is somewhat weak in relation to recent history. And we were also noticing that the Fed will probably have to pivot with the rate cut odds at 90% at that time when I derived this whole narrative shift, right? And at the current time, guys, you are currently seeing the end result of the unclear narrative and the impacts of that narrative on possible economic data points. And that has led to, last Friday, the fact that the Fed is clearly at a stance where they feel like they have to pivot. So if you've been feeling a little bit underwhelmed by the market performance recently, you would not be alone. That is a byproduct of a somewhat cloudy market environment right now, where we have a very, we have a clash of two narratives right now, essentially. Number one, is the AI trade still in play? We'll get to hear from that. From NVIDIA earnings this Wednesday. So is the AI still in play? A lot of people are kind of nervous heading into NVIDIA earnings. We're sitting on a lot of gains, and some people have kind of gotten a bit of cold feet ever since last week, where we saw a huge retracement in a lot of the growth names. Palantir coming heavily off its top. Some of the nuclear favorites that retail likes to play a lot coming down heavily off their top. Now, we did have other names pull back as well. Some of the fan favorites, names like Robinhood, down 10% from the highs. SOFI came down, but ever since has recaptured those gains as well. But you do have other names like AMD, which had a tremendous rally and now has pulled back one of the steepest amounts that it has in roughly the last 3-4 months. And you can find other retail names that are kind of suffering the same fate. So people are getting a little bit anxious in terms of NVIDIA earnings. They're sitting on a lot of gains. A lot of people are probably winding down some of their positions. We also have an unclear narrative in terms of the macro right now. How bad is the inflation from tariffs going to be? How bad is the jobs market going to get? And number three, is the Fed possibly a little bit too late to the curve? Are they going to be able to save the day? All of those concerns, guys, are very logical. But at the end of the day, you should be focusing on one very clear thing, which is the one main thing that moves the markets in the largest fashion over and above all of these narratives, over and above all of this sentiment. And that is corporate earnings. This entire market is a reflection of corporate earnings all the time. It can move in either direction because of short-term sentiment shifts. However, it does rely on earnings. And what we know from the most recent earnings from, most of all your S&P 500 companies are the following facts. Number one, out of all S&P 500 companies that reported, 80% plus of all companies reported beats on revenue and EPS and posted very bullish forward guidance for the end of the year. So companies are not feeling the pain just yet, despite the choppy price action that you might be seeing. And number two, stands to argue, guys, about fighting the Fed. Should we ever fight the Fed when the Fed is going for rate cuts? And that is usually a bullish thing for the markets. Do we fight the Fed and eventually, all pivot bearish and go for the absolute market crash into recession? No, we don't necessarily have the data for that either. So right now, I completely understand if you're a little bit anxious or you're a little bit confused as per the price action. And when you're a little bit confused and a little bit anxious, well, it's important to slow down your trading, right? Wait for the market to come to you. Build a shopping list of your favorite and highest conviction, highest quality companies, establish some levels, and wait for the market to come down into them. Do not chase, do not be greedy in this current market environment. As we know, it's been very choppy as of recently. And if you're a long-term portfolio holder, well, you guys know the drill. 10-15% of every single paycheck you should be contributing into the market. Some buys will be higher, some buys will be lower, but if you just embark on the natural DCA process, you should be able to get through this period of time in the markets just fine. So that's your introduction, guys. Hopefully you enjoyed. In terms of today's video, what we're going to be getting into is going to be, number one, a full technical analysis rundown of the SPY, the QQQ, and other major sectors. How are we doing now that we've pulled back a little bit into Friday's move? Thereafter, we will take a look at our big tech list down here and do the same thing. How are all these names shaping up into NVIDIA earnings? Have they pulled back too much in relation to Friday, or is everything okay? Thereafter, we will take a look at our biggest gainers and losers of the day. There was a lot of losers today, so we're going to try to cover as many of those as possible, but there were also some names that came back in a big way, especially some of the fan favorite names such as Rocket Lab and other names as well. So we'll take a look at this biggest gainers and losers list at the end of the video. And after that, I will give you guys a very brief look into the trades that I made today for my portfolio. There weren't that many. I'm kind of being very patient this week leading into NVIDIA earnings because, as I was saying, I'm letting the market come to me. There was a ton of names on the red, but none of which that I truly wanted to play. There was a few here and there, and I did play those, but I did not take a shotgun style approach of playing absolutely everything, burning all my buying power in one single day, and then just sitting on my hands and crossing my fingers that NVIDIA earnings are going to be okay. So we'll take a look at some of the trades I made later in the video, and that should be it for today. So without further ado, let's jump right into it, shall we? The SPY down about 0.44, the Q's down about 0.29, and all across the board, we had a bit of a switch. You'll notice here that big tech did a good job, well, as good of a job as it possibly could, holding up the market, but it was not really all of the Mag 7 names, only NVIDIA, Google, and Tesla doing a good job. Shout out to Netflix as well. They tried their best. If you can see what happened here, guys, the whole bottom half of the market kind of gave back some of their gains that they had last week, and only some of the big tech names did their best throughout the day to help hold it up. Now, some of these names were green throughout the day. Apple, Microsoft was flat, even Meta, but it was really in the last 5 or so minutes of the day. You can see this big candle that kind of flushed the last of the big tech names down a little bit. So the heat map was looking pretty good until about 3:50, 3:55 p.m. And then we kind of lost Amazon, we lost Apple, and we also lost Meta. But prior to that, they were green. And that's just pretty funny because if you look at the 1 week relative, guys, big tech is still red, and the bottom half of the market is indeed still green. Shout out to Walmart and Costco, though. They've been down in terms of the consumer defensive side of things. But all in all, we're just kind of seeing a slight rotation back to big tech a little bit over the course of today, but very tough to derive an absolute conclusion from today's price action. It's just a little bit of softness, a little bit of weakness leading into the NVIDIA earnings, leading into the GDP numbers, and leading into the inflation read at the end of the week. In terms of the one-day relative, you'll see that even better. Only communication services was higher, and that was largely a byproduct of Google and Netflix printing the highs. But other than that, everything else truly towards the downside, led by healthcare, defensives, utilities, industrials, financials, and technology was just a little bit flat on the day. And that is pretty much a contrast to what we saw last week, where we saw the broadening out of the market, where all major sectors were in the green prior to today. But after today, you have still some slight pullbacks on consumer defensives and technology. Although technology didn't have a bad day and had a beautiful day on Friday, still not enough, guys. a lot of them are still down on a 1 week relative basis. As I said, right, a lot of the very popular AI names, they really fell off a cliff in the past 2 weeks, and some of them, such as Oracle, such as Palantir, and a few others, just simply have not recovered just yet. So it's leading investors to question, right, now that the damage, some of the damage has been done on some of these names, a lot of people must be poking their heads out of the sand right now and saying, is it over? Is it okay? Is it all right to get back in? We'll take a look at that later on in the video as well. So now that we're through the rotation analysis, I want to bring your attention to where we stand in terms of market breadth, because the last few days have been a bit wild, right? But the breadth indicators are still sitting pretty good. Even after today's slight decline, percentage of stocks above their 20-day moving average is still sitting at a very healthy 70%. However, we can see some short-term weakness in terms of that. The more important ones, though, are these following two. Number one, the percentage of stocks above their 50-day EMA. If this is above 50%, you do have institutional support. So after 1 day's worth of red, not the biggest deal, but a lot of attention this week will be focused on NVIDIA earnings. But this breadth, guys, is not too bad. It's rivaling the breadth that we had in a very clear market environment narrative, which was end of May, June, and into July as well. So you do have fairly decent breadth here in terms of the 50-day EMAs. And percentage of stocks above their 200-day moving average, as I was talking about on the Saturday video, guys, this is a very good read. 59% of all stocks are currently still above their 200-day EMA, which is, some of the best movement that we've had all year. Take a look. This is the start of the year. This is the best amount of breadth that we've had in the entire market since the beginning of the year. So that has to be notable to you as well. It's going to take a while to undo that. The 200 EMA is not as easy to undo as something like a 20 EMA. So what we could be seeing is some short-term give back, but maybe some longer-term broadening out of the market, more into a healthy direction. So that's your breadth analysis right there. In terms of the technicals here, guys, well, there's a very clear line in the sand level, and that line in the sand level on the SPY is this level right down here last Wednesday and Thursday, these lows. As we know right now, the bulls are still in control of this chart. It is a daily uptrend. It was looking for some follow through, and now we're pulling back a little bit. So there's only a couple things that you can do, right? You can just erase today and act as if it never happened. If NVIDIA earnings are super bullish, the bulls will just retain control. In the event that NVIDIA earnings are bad, but not bad enough to bring down the entire markets, we're just going to head into a bit of a consolidation range. And lastly, this is why it's the line in the sand, right? If you crack it, that is definitely daily downtrend, might head a little bit lower. And keep in mind, not this week, but next week thereafter. Sure, there's the Labor Monday holiday, right? Labor Day on Monday next week. But also, next Friday is the non-farm payrolls. The same thing that brought us down here, the same thing that the Federal Reserve is worried about. So that news catalyst is going to hold a lot of weight. So essentially, until September 19th, there's only a few things that you have to look out for, meaning mid-September when the Fed is scheduled to have their possible rate cut meeting. Not going to get ahead of myself until they actually say it, right? So that being said, there's a few things on the horizon. There's the non-farm payrolls next week. There's NVIDIA this week, of course. The week after that, so 2 weeks from now, there is CPI. All of those data sets are going to play into whether or not we actually get a rate cut and also play into the clarity of the current narrative, right? Will the clarity get better or worse? Well, you'll have your results here, guys, in just a few short weeks. So keep that in mind. We also have somewhat bearish seasonality. Fear and greed is right now still in greed, but not running too hot. But you also have some good market breadth and some good earnings. So a lot of conflicting data. If you ask me my opinion, I'm still bullish on the market. If you ask me for a gauge, I'm like 70-30 right now. 70% bullish in the short term, 30% bearish. But I also do understand that any moves lower here, guys, we're just going to be hunting for some very healthy higher lows. The SPY is looking pretty good right now. Beautiful weekly uptrend. On the weekly, line in the sand is a lot lower, 618. So the bulls are working with a ton of space no matter what happens this week and maybe even into next week. And on the QQQs, same concept, guys. Take a look at the QQQs. Your line in the sand level is going to be last Wednesday as well. If you unwind this move right there and go daily downtrend, you're just looking for some very healthy weekly consolidation. Weekly higher lows are set at 551. Even if you unwind this, I will bring your attention to the analysis we did just a few short weeks ago, right? Any weakness felt during August and September, you're just looking for monthly higher lows. It wouldn't look so awkward if the end of the month of August with a turbulent market narrative, turbulent market environment, just, agrees to pull back into the prior resistance highs, which would be current support and the 12 EMAs. And yes, that would be a 5, 6, 7% drop on the Qs. right? But still, is it healthy market price action in relation to all the catalysts that we have on the horizon, in relation to the seasonality? Yes. But the one reason why I would be a firm dip buyer, no matter, no matter on the Qs and the SPY, if we drop shallow, if we drop medium, or if we drop deep, why would I still be a dip buyer in all three of those events? Well, number one, corporate earnings, they're good. We have the guidance. People forget how good the earnings were that we got a few short weeks ago. And number two, the Fed's cutting interest rates, guys. And you also have $5 trillion of tax cuts making their way into the economy right now. There is not mass layoffs in the economy right now. There's only a slowing of new jobs creation, and inflation, although it is upticking slightly, is not that bad. If you take a look at the Truflation gauge right here, which measures 30 million different items on a day-to-day basis, this is much more accurate and much more in line with consumer spending patterns than the CPI, which only measures a key basket of goods, but doesn't necessarily account for any substitution effects, right? Truflation is sitting at about 2%. That's not a very inflationary environment for me to get worried about, at least, right? So overall, the internals of the market are good, but the short-term sentiment may cause a little bit of short-term anxiety and short-term wild price swings. But I will be a net buyer, though. Moving on to XLF financials. Financials also pulling back a little bit. Daily uptrend, very, very healthy right now. A lot of space, anything above 52.25. Just looking for a higher low. Trying to go for the perpetual daily uptrend right now. In terms of the weekly, we're still, awkwardly, slightly close to the all-time highs with a lot of space. Big support down here, 52, down to about 50.5. In the event that we drop, I'll let you guys know what my favorite names to be playing in the market are in terms of financials. But you guys probably know by now, we'll be constantly scouting out Visa down here. Once again, 340 to 330. Moving on to XLV Healthcare right now. Healthcare also retracing some of the gains that it's had in the last 2 weeks. What a strong move by healthcare right here, clearing above the infamous line in the sand level, which was 137. So you broke it, and now you're kind of looking to backtest it a little bit. So still an accumulation zone, still choppy price action for healthcare. The monthly time frame does it best, in my opinion. Is it a good area to constantly accumulate healthcare for a longer duration breakout? I do believe the answer is yes. 50 EMA on the monthly would also probably agree with me. It's only been touched and almost touched twice, guys, in the past 15 years. So whenever it does happen, it's a good area to accumulate, and no, you would not be late if you're trying to buy this entire sector here. Moving on to semiconductors right now, one of the names that helped us stay a little bit afloat today, right? Limited the damage, in other words. Well, the line in the sand level is still down here at 281. This one is going to be moving with NVIDIA earnings and probably nothing else. Until NVIDIA earnings, I'm not expecting a break of these lows, but I'm also probably not expecting a break of these highs. So we will see what we get. It's really anybody's ball game. We are at the midpoint between the highs and the lows. So anybody's ball game right now, no clear trend. We'll just have to see what happens this week. But I'll give you guys the worst case scenario because that's what everybody is always worried about, right? In the event that you pull back and flush some of these weekly lows, you're just going to be heading into very natural monthly consolidation. The larger support zone is down here, 261 and 250. And on the SOXX, which provides a more clear picture and more near-term support and is a more balanced ETF in terms of weighting, in my opinion, will be down here, 235 down to 212. I will be a net buyer of my favorite semiconductor companies if they come down there. Talking about AMD, talking about ASML, talking about TSM, talking about NVIDIA, and things of that nature in the event we do pull back, or just playing something like the SOXL, just waiting for my turn and selling some puts deep under the market and looking to possibly collect some of that juicy premium. So I'll be playing these names individually or either as a group. Moving on to IWM Russell right now. The Russell cracking nicely through resistance last week. This resistance was a very big one, 232, 225. Resistance for the markets, resistance, but also all-time high resistance, 2021 and 2022, essentially, right? So the Russell is not looking bad at all. Could be providing a nice entry opportunity, a re-entry opportunity. We're looking for this. You're looking for the breakout, the retest, and possibly the run. So if you do start to come down lower into this position and you wanted to accumulate some positions in the Russell, not the worst idea in the world. This one will respond well to any Federal Reserve interest rate cuts, but it is a long duration thesis, right? You're not going to snap your fingers and after one rate cut, the Russell is just magically going to go up 30%. But what the Fed did on Friday is it got the ball rolling in the favor of small caps and in the favor of growth names, which heavily rely on lower interest rates. So that being said, that's your entire market movements for today. If you want to take a look at some of the minor sectors right here, XLP remains trapped into support right here. Your support level is going to be 80.71 to 79.65. Wide range of accumulation, guys, but I am still a fan of buying these lows and then swing trading them to the highs. So just keep that in mind. Utilities also coming back a little bit. You'll see the clearest price action, in my opinion, on the weekly, just looking for a weekly higher low, maybe around the 12 EMA, which they've held since the month of April. Wouldn't be so awkward for a pullback. So look for your favorite energy names in the business. If you guys are looking to play the data center specific names, just go for recent support areas. If you're looking to sell some puts, a lot of those big players, right? GE Vernova. I know this is not specifically energy, but a name like that, you know, a name like Duke Energy also is kind of pulling back. That was one of the bigger winners. So target these large support areas. And if you're willing to play some of the utilities names, some of the ones that are more closely tied into the data center narrative, you could be getting your resulting pullbacks a little bit shortly. And now lastly, real estate, which had a tremendous rally on Friday for obvious reasons because of interest rate cuts, of course. Well, they're trying to break out here, but in the event that we pull back, look for a retest of support 41.50 down to about $40 is going to be this long-standing area that real estate has been using for a while. Whether you're looking at names like Rocket Mortgage for a pullback into 17, whether you're looking at other names, the likes of which could be some of the REITs, such as a name like Vici, perhaps, if you guys like this one, or O Realty Income, such as this one as well. Not too bad to continuously accumulate some of your favorite real estate names. I mean, Open Door, everybody's favorite meme stock, of course, on any pullbacks. If you guys are looking for the absolute Carvana moonshot, not a bad time to accumulate, but on names like this, you got to be very careful. Only invest what you're possibly willing to lose. Some of these real estate pullbacks, even on the home builders, could be a decent area for some re-entry, for some possible longs, for the theme, a theme that will be persisting into next year, right? So we're not looking for weekly call options here. No, we're looking to build positions and using the monthly timeframes as a proxy for the direction that this whole sector, talking about interest rate sensitive stuff, namely real estate, could be taking after rates have been high for the past 2-3 years. We're finally embarking on the cutting cycle, and that cutting cycle will last at least for the next year and a half. So keep that in mind. On to the VIX right now. The VIX doing absolutely nothing today. Still low at around 15. Not the worst, but also we have a few volatility catalysts this week, namely NVIDIA earnings, which could move this. And then we also have GDP and PC inflation. For now, a little bit low though. So still an environment where you would be looking for leap call options on some names that have been left behind because the volatility is low. And as a result, you're not paying a massive premium for those options. If you get a push higher on the VIX and big red in the markets, you guys know that's when selling puts is definitely going to come alive. You only need to look as far as pretty much last Wednesday when you had a nice uptick on the VIX. It freed up some fantastic premiums across the board on a lot of growth stocks, and we got some really good distance on those short puts. That's how I use the VIX. When the VIX is super low, I look for leap call options on my favorite names, not on everything, but on my favorite names for 2027. And when the VIX pops up a little bit higher, well, I'm looking to sell some short puts on some of the more volatile names in the market. On to yields. Yields still doing a whole lot of nothing. The 10-year yield still trapped at 4.25, and the 20-year yield still trapped around 4.85, 4.86 right here. So a whole lot of nothing. As I've been saying, guys, unless you see a clean break on the 10 below 4.2, you're not going to get anything in terms of a trend. On the 20-year yield, that would be a break below 4.7. Until you get the break, you're not going to get any clear trend. Maybe these just stay range bound until the September possible rate cut event. TLT, as a result, is just probably going to stay flat, still an accumulation trade. I know, it's a very patient trade, but I've been saying that for the past 2-3 months. Nobody should be surprised. Moving on to gold right now. So gold still doing a whole lot of nothing, trapped between 34. I moved this line a little bit, but it's really like the nudge above 34, right? 3420, 3400, clear range resistance highs, and the lower support area 3307 down to 3264. If you want me to, or if you want to see me take a position on gold right here, I'm just not going to play this range, guys. This range has chopped people up now for the better part of the last 3 months. I need to see direction. Give me the breakout retest for a long, or give me the breakout retest for the short on the downside. But what I will not do is just, guess which way this range is going to break. It's all going to be determined by the risk factors in the market, right? In the event that the data shows that the market is fine and jobs don't continue falling and inflation doesn't rise at a rapid pace, well, then that might be a catalyst for your gold to take a little bit of a candle to the downside, monthly overbought conditions, and you would just be looking for some very healthy consolidation. In the event that the uncertainty narrative rekindles a little bit here, so hotter than expected inflation again, worse than expected jobs again, well, that's probably when you're going to see gold try its hand at a rally higher, as gold is a uncertainty hedge, but also an inflation hedge for a lot of people as well. Moving on to Bitcoin. So Bitcoin and Ethereum down in a big way today. All weekend, sadly, Saturday, Sunday, and now the Monday session. Bitcoin, very clear daily downtrend. We were telling you guys to pay attention to this, the back test, and then what happened on the Saturday session when I filmed the video. I would not be surprised if it's a downtrend continuation. That's exactly what happened. Also, this weekly is now a downtrend. No close above on the weekly highs. All the candle closes, same location. So low equal highs, lower low. That is effectively a weekly downtrend. So you might be wondering, where are we heading? Well, logically, maybe 107 down to 100. Prior resistance highs. Also, consolidation area right here. You might just be heading down there for a bit further weekly consolidation. All this is going to be, guys, is very healthy monthly higher lows being set by the markets as well. So there's two ways to play Bitcoin, in my opinion. If you are looking to accumulate some longs for, a multi-year hold type of thing, a long-term hold, well, you're just going to be DCAing progressively through this dip without truly knowing where exactly it's going to stop. If you're trying to position, I want to invest $5,000. Do I do it here? Do I do it here? Why make that choice? Why not just DCA into the position until you have accumulated the position size that you want? So that's the type of trade that you'd be looking for a long-term position. For a short-term position, well, why not play the volatility? You can sell put options either on IBIT if you want to target this prior area of all-time high support. You can sell put options. If it comes down there, you'll get filled. If it doesn't, you get to collect the premium, and you can do the same thing on BITX, which is what I've been doing, just selling puts far under the market, waiting for Bitcoin to kind of come in to the level. Moving on to Ethereum right now. Ethereum down about 8.27%. They were up 14 on Friday. Flat during the weekend, and a big red candle today. This one's going to be very volatile, guys, overall, right? Very tough to say if it's going to come all the way back there or if the bulls are just going to engulf this one again. They're trying to, but they gave back a lot of the move right there, right? It was a new daily uptrend. You gave back what, 75, 80% of this move? It could just be range bound, right? It doesn't necessarily have to pick a direction just yet. If we went with the weekly timeframes, though, they do provide a bit more clarity if you continue the weakness into this week as well, and you unwind all of Friday's move, I wouldn't be too nervous, guys. On the weekly, it does show clear some form of exhaustion right here. And if you do pull back, well, the logical area that you might come back and sit down on would be 4,000 down about 3,700. This would be an area that I would not mind going for some more swing trade longs on Ethereum myself. But as of right now, very, very choppy action. It's a battle, and all the altcoins are down as well. So please keep that in mind. Crypto has just not been favorable recently, at least, since this candle right here, Thursday, August 14th. Bitcoin's been a big downtrend. It's always tough for the altcoins to fight against the major pair, which is BTC USD. That being said, that's all your market rundown. Hopefully you guys enjoyed. Now, let's dive into some tech names, shall we? So first off, moving into Apple, as usual, Apple down about 0.25%, roughly flat on the day. Pay attention to your line in the sand level, which is going to be the Thursday candle. If you flush this, it is effectively a daily downtrend, and you are essentially looking just for a bit more weekly consolidation. The bulls have a lot of support down here, though. These previous highs, and these lows, very nice area of confluence. That is roughly 215. I'll be looking for this nice little pocket here, 220 down about 215, maybe to sell some put options, and maybe for some reload for the longs, for the continuation of the possible weekly uptrend into Apple's events, which are coming up the very first week of September, the release of the iPhone 17. We will see if they can get it done, and we will also see if they have further comments on the AI rollout, which they've been struggling with. But the fundamentals of Apple indeed are improving, and I haven't said that too often. As a matter of fact, haven't said that in about 2 years, but now the revenue is upticking a little bit, so it could be pretty interesting, which is why I do still think Apple is a decent long here for some continuation. It's not going to be instant continuation, but can we see, Apple come back into favor? Quite possibly. I'll remind you, it is still lagging the overall markets year to date, still down about 9%. Moving on to AMD right now, down 2.62. Many of you guys might be getting nervous, but this is just all very normal price action. Daily uptrend was unfortunately unwound. Pay attention to the line in the sand level, which will be last Wednesday's low. If you break that, sadly, you are going to break down into furtherance of a daily downtrend. But as we know, guys, NVIDIA earnings. You guys don't think NVIDIA earnings are going to affect AMD? I truly think so. Well, so what we might not be expecting is a break of the bottom of support 156, but we also might not be expecting a complete rally back to the highs this week, much before we get NVIDIA earnings. So please keep that in mind. The clearest time frame, in my opinion, guys, is the weekly time frame. We are still just in weekly consolidation mode, right? Very obvious weekly consolidation. It's been happening now for about 3-4 weeks in a row. The bulls are taking a bit of a breather. We have not lost the support area. If I was looking to accumulate some AMD, I would be doing so here, but also down here. So leave some room in the event that you need to. And as a result, you'd just be looking for this being the monthly lows or down here. Both would look very logical in terms of price action on the longer dated timeframes. So instead of focusing on the 15-minute charts and trying to derive which way this one's going to break, focus on your longer timeframes, especially since AMD, I've been saying it, is a longer term thesis. You're looking for the expansion over the next year and a half, 2 years, not necessarily over the next 2 weeks. The valuation at 170 still is roughly not that bad at a mid 1.5 PEG ratio on a forward basis and a decent forward price to sales number as well. Onto Amazon right now. So Amazon just basically flat on the day, doing a whole lot of nothing. The line in the sand remains 221. So the bulls trying to protect this daily uptrend. We will see if they can follow through. In the event that you unwind, clear daily downtrend, loss of this current support level, and just looking for a bit more weekly consolidation. The bulls have space on the weekly, anything above 212, just kind of hunting for a tightening up of the range, perhaps, maybe going for it thereafter. But if Amazon pulls back, you guys know me, I'm going to be selling puts down here, mid 215 area. This is also going to be my area for some reload in terms of the longs. Amazon, fantastic company, nothing bad to say, guys. Around 220, the valuation is still quite manageable and would be an add for my long-term portfolio, but the price action recently has just been a little bit choppy. Moving on to Google. Google up about 1.18%. New all-time high today for Google again. This one, guys, I mean, Google, it went from a dog to one of your market leaders. Funny how that works, right? But Google obviously has some possible news coming up this week or possibly the week hereafter in terms of the Department of Justice ruling. So keep that in mind. It is going to move the stock in a big way. For now, though, you have a clear line in the sand level, which is 197.66. Any move lower, temporarily looking for a higher low for possible further trend continuation. But you guys know the DOJ ruling is going to move this stock probably in a wild fashion. The day which it comes out, right? If it's less bad than people expect, well, you're going to get a massive rally. If it's as bad or worse than people expect, you're going to get an absolute flush, which may take a few weeks, right, to flush out some of the longs here, reestablish some price support, reestablish some sentiment, and obviously reestablish some price targets on the stock. So keep all that in mind. I would completely understand if you are not willing to play Google at all, but the weeklies are looking quite good. The bulls are working with a ton of space here. Anything above 163 on any massive sell down would be a decent area. If you're a bit skittish on Google at the all-time highs, I can't blame you. My area that I'd be looking for on any weakness would be down here, 195 down to about 185. This is the area that I'd be looking for more swing trade longs, more long-term portfolio shares, but also to sell some options in the market as well. At the all-time highs, Google is still quite manageable in terms of a forward price to earnings ratio. I know we did it at 190. Now we're about 10% higher. So just add 10% to these numbers, right? It's still a low 20s forward price to earnings. It's still around a 1.5 peg, which is really good. Google's valuation is still very manageable. Will be even better, though, if we come back down to 190 or below. Moving on to Meta right now. Meta down about 0.2%. Not the worst day on Meta, but a whole bunch of nothing, right? Line in the sand still remains 733. Lose that without any new highs, and you are going into a daily downtrend. You're going to fill the earnings gap, and you will be going into further weekly consolidation. The weekly time frame on Meta is still looking quite healthy right now, not the worst. The bulls working with a lot of space on the weekly. The larger area of support, though, if you lose this one right there, is this big one down here, 710 down to about 678. This would be a nice area for me to build more shares in terms of long-term portfolios. The valuation right now of Meta at about 760 is not that bad. It's about a 30 forward price to earnings and a 2.27 peg. Not the worst, but if it does come down there, it gets marginally better. So that's the area that I'm going to be looking for some more swing trade longs. I actually started a small swing trade long on Meta today. I'll show it to you at the end of the video, but in essence, what we're looking for here is stop below here and looking for expansion towards the highs. We're keeping a very tight stop because we know that if this level gets taken out, you're probably going back and consolidating into the bigger level, and it may take a bit longer, right, to fully re-engulf this move a bit back. Moving on to Microsoft right now. Microsoft down about 0.6%. Daily downtrend continues at this point, and we are still under the infamous 12 EMA. I was telling you guys, when you lose a 3-month uptrend and a 3-4 month 12 EMA, well, sadly, it's just going into weekly consolidation. So, line in the sand for Microsoft remains the lows of last Thursday, which is pretty much this guy right here, 500 psychological. Tiny support right there, resistance for a while. If you lose that, you're going one level lower and probably heading back down. And this is also the weekly 12 EMA. Still weekly consolidation, guys. I'm not going to guess where this one's going to stop, but I'm also not going to be so ambitious as to say we're coming back all the way down here. That would be a big move on Microsoft. That would be from here down there, another 10%. From the highs, that would be like 20%. You're not going to get that unless something truly bad happens to the indexes, in my opinion. But you have to let the bulls show you where the bottom is, right? So rather than guessing, is it here? Is it here? Is it here? You don't have any support levels to be basing that thesis off of, right? So wait for it to do something like Netflix did, right? Wait for it to put in a shallow leg to the downside, engulf and reset the trend. Then you have a more manageable entry long. You can set stop losses below the weekly lows and go for a possible next leg of weekly and next leg of monthly expansion too. So keep that in mind. I'm not playing Microsoft right here, but I'm also not adding any long-term shares. The valuation is just a little bit too rich for me right now. Moving on to Netflix. Netflix, guys, kind of what I was saying with Microsoft, right? Downtrend, as we know, loss of the 12 EMA, as we know, and we're waiting for the bulls to show us where the bottom was. Well, they showed us, right? They put in a nice daily uptrend. They recaptured a zone. So now we have an area that we can take some trades from. The stop loss for any trades would have to be below here, 1180, below support. Because if you unwind that right there, that is essentially looking for a weekly lower high, and you might just be looking for further downside. However, if you don't unwind, you've successfully found the weekly higher lows, and as a result, you'd be looking for a new weekly uptrend. So you have to have an invalidation point for any longs, and that would definitely be it. In terms of, am I adding any Netflix shares up here? Not really. The valuation is a little bit rich for me. It all depends though, right? If you have a 5-year time horizon, which I do, but I'm full on Netflix. I was adding during tariffs. I've built my position throughout the years. I'm fine. But if you're looking to build a position on Netflix, you need to have like a 5-year time horizon. You need to be able to absorb some of the short-term price action volatility. The 5-year price target from management is market cap of about $1 trillion, which would be a 2x from now by 2030. Not the worst compound annual growth rate, right? Moving on to NVIDIA right now. Well, NVIDIA, there's not much to say here, guys. They have earnings on Wednesday. The stock's going to move about, let's call it 6 to 7%. You can take a look here at the NVIDIA expected move. You're going to see an expected move of about 5.68%. Let's call it about 6%. So 6% to the upside, guys. Well, you're going to get brand new all-time highs, and the bulls are going to be great. They're going to reset the daily uptrend, and all will be fine. If you get 6% to the downside, though, well, just watch the line in the sand level from last Wednesday, essentially. That would be daily downtrend. You would be heading into a bit more weekly consolidation. It's probably going to drag down the entire market and especially semiconductors, but it would all be for healthy consolidation here, guys. Who is in control of this chart? It is clearly your bulls. So whatever happens on Wednesday, I'm pretty sure they'll have great numbers. But as we've seen many times so far this earnings season, great numbers doesn't necessarily translate to a rise in the stock price in the after hours. This would be very healthy consolidation. The higher lows are here, 142, and you have massive prior resistance, which will be current support. And at that point, you would just be looking for a very natural monthly higher low. I will be playing the heck out of NVIDIA if it does come down there, believe me. So we'll have a look at what happens after earnings. Until that time, you're probably not going to get some crazy moves, like some crazy pushes to 200, or rather a breakdown below Wednesday's low. It might just stay a little bit muted until its earnings. Moving on to Tesla right now. Nice push by Tesla, 2% coming into resistance right now, 360 down about 340. The bulls are looking for continuation and looking to crack above resistance. Very tough, guys, to buy here, right? Sadly, a little bit too late. So that being said, the bulls are also looking for the weekly expansion for Tesla as well. It's looking good. If you are in any longs, they're looking good. You might want to set a trailing stop loss on this trade, perhaps below the lows of today. But the take profit target, you're into it right now, all the way up to about 360. What the bulls are looking to do is they're looking to engulf this entire move, crack above, maybe push into 380, and then maybe back test. I would be a fan of playing this next entry right there. We will see if it happens. If they are not able to do it and you come back towards these lows, we might look to position again. But as of right now, Tesla is really just trying its best to break above that support range. As I said, Tesla, probably not a bad play, guys, considering the rate cuts that are on the horizon. It'll do well for the short-term negative portion of their business, such as very slow year-over-year comparisons in terms of deliveries and, just car sales, essentially, with the rest of the OEM industry. Moving on to Palantir right now. Palantir was down 5% early morning. There was some great short put opportunities on Palantir. I was able to get in today at 1:30 and out within the first 2 hours of this trade. Very profitable trades. Just got to play them with some distance, right? Everybody else, though, looking to pick short-term direction is kind of getting a little bit chopped up. If you're trying to short off these opens, the bulls are just trashing you. And sometimes when you try to buy these rallies, the bears are just sending it right back. So Palantir kind of struggling right now. The line in the sand, though, is definitely last Wednesday's low. If you reach those lows or breach them, you are going to head into a daily downtrend and further weekly consolidation. Good thing the bulls are working with a ton of space. Anything above 129, looking for a higher low. Palantir right now, I mean, this monthly candle closes in 3 days. 3 days. If it closes like this, guys, and then September is somewhat choppy for the markets, you would not be surprised to see Palantir come down a little bit. Palantir's had an amazing last 1 year's worth of trade. We have barely had any, red monthly candles on the chart right there. However, that being said, it's pulled back to the 12 often. I know you guys don't want to hear that, right? But the area that I will be trying to farm some premium when we get these big red days is down here, 130 down about 120. I don't need it to come down there to fill me. I just need to sell some put options here on big red days, collect my premium, and kind of walk away. I'm still holding some Palantir shares that I have, but I'm not adding any new shares up here. We will just have to let the bulls and the bears play it out, essentially, and the bulls are eventually going to have to reset a new daily uptrend. We will see if they get it done today with the low of today and breach last Friday's high. We will see if they unwind a little bit more. You guys know what I'm doing. I'm selling some put options down there. Moving on to SOFI. SOFI, probably the clearest winner of the past week, guys, right? A lot of other names are somewhat choppy, failing their breakouts or still being quite muted after last week's growth sell-off. Not SOFI. SOFI, one of the best performers recently, and SOFI is running out of resistance levels here, guys. They're pushing through the last batch. A lot of longs are on the table right now. Everybody is bullish on this stock, and with good reason. We've been saying it since down here, essentially. SOFI, phenomenal company, and it stayed undervalued for a very long time. That being said, forward price to sales, I would have to redo it real quick. If you guys want me to redo it at 26, forward price to sales is probably your more accurate measure right here. If we take in consideration 2025 sales here for the year end, have a look right here, 3.42 billion. The market cap right now, 31. It's not even that bad, right? 31 divided by your, what did I say? 3.42. It's not even that bad. We're talking about a 9 price to sales. That's not terrible. 9.06. I mean, you got so many names out there like Robinhood, like Palantir trading at ridiculous price to sales valuations, 20, 25, 30, 40, 50. SOFI is only a 9. So can you see further upside on SOFI? I do seriously think so. And you guys know I've been saying this price target since down here. I would not be surprised if SOFI is a $45 billion company by sometime within 2026. So probably maybe more towards the end of the year. So SOFI price action has been very good. And they also have held up pretty well right here. Any move lower looking for a higher low, anything above 2130, new higher low. If you come back into this area, decent location to be selling puts under the market. It would be a very classic breakout, retest, and possibly run. That would be the next area that you would be targeting for some further swing trade longs. Congratulations to all the bulls who accumulated some shares in these entire lows, and even here, and even here, and even maybe here, as we were kind of saying on the channel in the last few weeks. And now we are reaping the rewards. I'm not selling any SOFI shares. The first area that I kind of clip out of some SOFI shares, maybe psychological 30. Moving on to Uber right now. Uber down 1.68%. Very choppy day for Uber, but the breakout was pretty clear as of last Friday. The higher lows are set at 91.50, looking for a new higher low, and you got all of this support, right? 93.50 down about 90.3. In the event you come down there, just keep in mind the higher time frames right here. Nice weekly uptrend by the bulls. Still higher highs, barely. So any pullbacks right here might just be a reload area for some longer term positions as well. Into the low 90s, the valuation is still pretty good at about 1.17 peg and about a forward price earnings of 30. Free cash flow yield is really strong as well on Uber right here. So I would not blame you for adding any more shares to your long-term portfolios. Not a bad location. And even if you pull down into this area, it's very easy to set a stop loss below the support and try and go for the weekly upswing a little bit higher. I'll let you guys know if I take any swing trades on Uber. None for me right now. And lastly, TSM. TSM also up on the day, 1.12%. Not the worst day for TSM. This one's going to move a lot after the Wednesday session, of course. That being said, a daily downtrend clear as day. The bulls are trying their best to put in a very nice bounce and eventually try and reverse this daily. But it's been very, very, very choppy on TSM at least for the last month, right? The clearest time frame for me is the weekly. This is a very nice area of weekly accumulation. It's a wide area of accumulation, but accumulation nonetheless. That being said, around 235, I did this valuation here at 210 in the event that it pulled down here a few videos ago, just to show you guys how cheap it would become. If you guys want me to redo this one again at 230, just to let you guys know, is it a decent buy up here? it is still a decent buy for a long-term portfolio up here, in my opinion. If you're taking a look at 230 divided by 967, you're looking at a forward price to earnings of 23.78. And if you divide this beautiful number here by your APS growth rate on average for the next few years, you're looking at a 1.4 peg. That's really not that bad at all, guys. So TSM, very strong location to be building up some longs. And if it moves a little bit lower, even a better area to be building up some longs. All we're doing is we're just, yes, weekly consolidating right now, but also all the monthly. If NVIDIA earnings are bad and we come back down here, this is where you'll find me building swing trade longs. So right now I'm still accumulating portfolio longs, long-term portfolio longs, but where do I want to see some action for maybe some short puts or things of that nature? 220 down to 210, but that's also probably going to be an area that if it does come down there into late August, into September, we'll see what happens. If we come into this location, that's where I build some swing trade longs with possibly some options as well. I'm just being a little bit patient for those right now. And with that being said, that is everything in terms of your entire list. So hopefully you guys enjoyed that rundown. Now let's dive into the biggest gainers and losers of the day, shall we? So in terms of the biggest losers, of course, we have some of the crypto names. Obviously, the 2x leverage ETFs are at these lows right here, but you might be wondering about Tom Lee's fund here, BMNR. This one for me is indeed a long, but a long a bit lower here. I have a short put order active for about $42, and I would not mind accumulating some positions down here. Low 40s down into the 30s, not a bad location. They've accumulated a ton of Ethereum as well. The Ethereum amounts that they do hold right now are getting a bit close to the market cap, so it does represent a decent proposition here. Here, they were trading really at a premium, and don't forget, the nature of this name right here is perpetual dilution, and they will raise capital by diluting the shares to go purchase more Ethereum. However, if you can find their Ethereum balance, meaning the market cap of their Ethereum, close to the market cap of the equity, then it represents a better deal. And for me, that would be in the low 40s to 30. So as of right now, I'm just selling some puts. If you wanted to accumulate some shares, I wouldn't blame you, but always kind of bet small on these names. Other names we have to talk about today is, of course, Open Door. Open Door, once again, trapping everybody at the highs coming up from Friday's close, right? Everybody was super bullish, 16%, ending down the day 9. The easiest way to play this one, in my opinion, guys, is possibly short puts under the market if you're looking to build further longs, or you just go for the call options, 2027 call options, and you just hold. This one is going to be extremely volatile. It is impossible almost, because there's just so much volume every day. It's impossible to say where it's going to stop, but a clear location would be the prior highs right there, talking about $4. $4 might be your next touch after cracking these highs. But you guys know when these ones get started, they're very, very volatile, right? Just keep in mind, Open Door can run more. It has the narrative. It is becoming the new, the largest meme stock that people are trading, but it also has a fairly bullish theme behind it, which is rate cuts into a possible rekindling of the housing market overall. So accumulations of some longs as we move forward, yes, it is a possibility, but always, guys, only bet what you're willing to lose on these names, because we know that as quickly as they go up, they will possibly go down. The one thing that you shouldn't be doing is going for the FOMO longs. Build on the retracements. You always get some very juicy retracements. The last time that I built some positions on these, we're back here. We sold some. I mean, we were called away at some shares at $2.50. We may be called away at some shares at $4. If it comes back down, I have another short put order for about $3.50. So I might just get back in on some of these shares again. And I'm just playing this one as it comes down into me and then carrying the longs for the next levels. You might see me with a few call options in the near term future. They'll always be very long dated call options, right? Then we have to talk about all the IPO names. Figma, bullish, coming down another 8% today. Names like Circle as well, down 7.25% today. Names like CoreWeave, still struggling a little bit too. So all these IPO names kind of getting unwound here real quick. So without further price action, you'll really have to go with what your fair valuation is for these names. If you ask me what mine is on Figma, it is about 55. In the event that you unwind a little bit further, you might find me trying to sell some put options into the 50 level. Keep in mind, they have earnings in 2 Wednesdays from now. So that should be interesting for this stock real quick. So I'm not really playing it until it comes down into my target level. The bears are clearly in control of this chart, and until I see a clear daily uptrend, it's really tough to position for some long-based swing trades. And if you ask me where I would want to buy some shares, as I said, 55 on Figma. Taking a look at bullish right now, same concept. Bears are in control of the short-term price action. Line in the sand remains last Wednesday's lows at about 56. If you ask me where I would not mind buying bullish, it'd probably be like low 50s, right? So we'll see if it comes down there and picks me up. If not, I'm perfectly fine with it. Circle is coming up into a nice area of accumulation, possibly 120 down to 105. Previous, the next closest support that we have, right? This one is already off so much from the highs, guys. 58%. Now here, it was definitely overvalued, but we did a little bit of projections here after their earnings, right? And we were saying that in a base case scenario where you gave Circle a 10 price to sales by 2027, that would be roughly a $55 billion market cap. It would give you an average share price of around $242 per share. That's the base case. The bull case is a lot better, so it lets you know that there is some decent upside into the next 2 years of trade. The way that I would play this is not trying to pick bottoms for some short-term call options. No, it should just be accumulating some shares into a longer form thesis. At least that's the way that I'm playing this one. Special shout out as well, if you guys wanted to sell some put options on big days of volatility like today, you can really get some nice areas way under the market to sell some puts on these names. Tempest AI also coming back down. Tempest AI, if we get a revisit somehow of the 70 to 66 level, that would be the next area for some casual reload of the longs right there. It is a nice weekly upswing. We're looking for the good old breakout retest. It's been a big area of resistance, this guy right here, 71 down to about 66. Decent area for a retest for some possible revisits of some longs, or if you come down into there hard, maybe even some short puts under the market. Not that bad of an opportunity. I like Tempest AI. I think they could do very well over the next 2 years. So if you have some long-term shares, I don't really see a reason to sell it right now, but it might just be a little bit challenging to try and pick some short-term bottoms of some swing trade longs right now. And as I always tell you guys, please do not buy these breakout candles right there like we had on Friday. I get the feeling that so many people probably got trapped on Friday buying after the rallies. Why? Just don't be that impatient. There's always so many opportunities that are pulling back in the market. Just wait for the rotation and you may be quite pleased with what you get overall. Talking about MSTR, that one is also down after Bitcoin. You guys know I'll be building a bit of a position here on MSTR, 338 all the way down to roughly 311. And in the event that we break all the way back down here, I'll accumulate the whole way. The simple reason is that the MSTR right now is trading at a very low MNAV, right? Very low MNAV at about a 1.62. And I keep bringing up this chart, right? MSTR MNAV history chart. Whenever you find MSTR trading at a really low MNAV like today, right? Well, normally in the past, it has proven to be a very decent buying opportunity. If you come back down, I mean, this chart is not relevant. I mean, it's not up to date it's relevant, but it's not up to date. You can see 1.6 on the MNAV of MSTR. That was some of the lows that MSTR has hit over the course of the past 3 years. So I'm a big fan accumulating MSTR when Bitcoin is falling, but also when MSTR is somewhat undervalued in relation to its average MNAV, which is currently still around 2, right? So not too bad. I will be accumulating some shares. A little bit difficult to predict the absolute bottom for some shorter term call option plays or things of that nature. If you take a look at a name like Elf Beauty will be a short put opportunity for me, but I'm looking for low 100s. This area has been a very nice area that the bulls have kind of played some defense in or around, talking about 105 down to about 90. So on any big red days in the near term future, if we get those, I'll be looking to sell some put options on Elf Beauty. Elf Beauty is still very decent, guys, in around $100. The valuation is still quite manageable. Price to sales is pretty cheap. PEG ratio and price to earnings ratios are also pretty cheap. And the growth is still quite good into the next few years. It's just that Elf Beauty really hasn't been doing too much of anything over the course of the past 3 months. So that is the way that I'm playing this one. Hims was actually on the top 5 options list yesterday. Today's sell-off was not enough to get those infamous high 30 strikes that we were looking for, though the bears are clearly in control right now of this chart. And if we flush the line in the sand, which is 41, you are going to head a little bit lower, crack the 200-day EMA, and then, and only then, you might be able to find some short put opportunities down here, 36, 35. I mean, I'm not buying any shares of Hims. You guys remember I bought them here, sold some here, half my position. All my Hims shares are now free. I sold half at 2x. So the ones that I have now, they're all free. If you ask me where I would accumulate more, I don't want to hurt anybody's feelings, but this is just me, right? You guys do you. If you guys want to buy Hims here, we covered them after earnings. It's not a bad proposition, right? I mean, the valuation right now in terms of price to sales is not terrible. Price to earnings is a little bit sketchy because they're coming off of 0 EPS and now they're rallying really fast or ramping EPS fast. Price to sales is not terrible for the next 3 years, but if you ask me where I would buy back my shares, probably mid 30s overall. Talking about a stock like, let's say, I don't know, like Duolingo, right? Duolingo's been struggling. Next area of support is down here, 300, down about 275. We will see if it comes into that area. Looks like maybe it wants to. We've now lost the support area. The bulls were trying to defend. 370 down to about 332. Not that bad. I mean, this stock is down a lot from the all-time highs. We covered their earnings. Their earnings are pretty decent, but the valuation is always a bit questionable with these growth stocks, especially when they're trading at a relatively high peg and a high price to sales. So if there's further unwind of our favorite growth names, we might be able to pick up some Duolingo down here. That will be the next area at a bit more manageable of a valuation. The cybersecurity stocks, guys. Fortinet unable to crack above its resistance range. Fortinet is a short put trade for me down here in the low 70s. In the event we revisit and the bears continue on with the weekly slide and come back down into this very beautiful area of resistance, which did act as support after the earnings flush, may act as it again. We'll do that. The only reason I'm not playing them right away was because we got CrowdStrike earnings on Wednesday, right? If CrowdStrike comes down into here after earnings, talking about the 390 down to 360, you might see me accumulate a bit of a CrowdStrike position. You'd be revisiting some of the April candles, and it just would be very healthy monthly consolidation into the monthly 12, into the prior monthly congestion zone right there, looking for a monthly higher low for further trend continuation. I will bring you guys the monthly, or rather the earnings when we cover them on the channel on Wednesday, of course. So not really playing the other ones, and shout out to a couple other names maybe that we can do on the lows right here. I don't know. What should we do, right? Micron maybe? Micron is indeed a buy for me. If we come back down below 110, I'll be looking for short puts, maybe also accumulating some longs. Micron is still trading at a very cheap valuation and just looking for a bit of monthly consolidation here. Fantastic push off the lows, higher lows, and now maybe looking for the expansion come Q4. Guidance on earnings was fantastic. Nothing bad to say at all. And maybe you guys want me to cover Robinhood. I know whenever I don't talk about Robinhood, some of you guys get a little bit upset. So let's cover Robinhood right now. I mean, the bears are still in short-term control of this chart. If you get a breakdown from the line in the sand level, which is 99, you're going to be heading for the daily downtrend. You're going to be heading for the weekly consolidation. You don't want to lose this, though, 93. The bulls still in control, but we are extended on a few key metrics right now. Weekly is still a little bit overbought. The monthly is definitely very overbought at the mid 80s, well off the 12 EMA right now, and also the valuation, guys. The valuation, no matter which way you slice this one, the valuation is very high. Price to sales is very high. PE and PEG are very high. I know you guys like to think this one is like Palantir, and maybe it might just be, but I'm not really playing Robinhood up here. However, if you get some big red days on Robinhood, as well as the other growth names, my favorite way of playing this, selling puts way below the market. So I'm not touching it up here for a swing trade long. I'm not buying any shares up here for the long term. I think it's priced in a lot of the growth that it might have, but it's a fantastic company, and congratulations to all the bulls out there. And lastly, but not least, if we take a look at some of the names on the highs for today, IRN looking very strong here, guys, but you're probably chasing if you're buying up here, unless, of course, you have a longer term thesis for the company, right? Take a look at the revenues. I know some of you guys don't even care about this stuff at this point. You know, true notion of the peak bull market, right, is when people just don't care about valuation. It's trading about a 5 price to sales right now for forward 2026 sales, which is not terrible. But the way that I like playing this one, pullbacks into support, right? If we do pull back here, you get a bit of a downswing right there. Selling puts under the market, not too bad. Also a nice reload area for some longs, but this one is now gone. I wouldn't necessarily be selling if I have any shares, but it's really tough to start chasing this one, right? You really want to play it on some pullbacks into support, or the consolidation areas. Could be a very nice DCA area. MP Materials popping up 6.53, looking very strong. Daily downtrend though. The bulls are looking to get this back. Super extended though. Very extended on the monthly time frame. Very extended on the weekly time frame as well. You barely got a pullback before pushing higher. The names that I'm playing are USAR. I'm playing USAR on a pullback down here to 14, selling some puts under the market, and quadruple U's. Just because I'm looking for the next companies that are possibly going to get some Department of Defense love here, because the Trump administration seems to want to fund a lot of these critical mineral companies. This will be a recurring theme, not only for the next 2-3 weeks, maybe for the next 2-3 months, and maybe even 2-3 years. So I'm looking for the next MP Materials plays out there, and these names, USAR and UUU, seem to be some of the consensus plays moving forward. If you take a look at Rocket Lab real quick, so Rocket Lab, phenomenal day, but tough to derive any price action in terms of confirmations, right? So daily downtrend, nice engulfing move. Now you need the bulls to get it back, right? Set the higher lows and go for it. If you move down a little bit lower into these guys, talking about 43, 42, nice breakout retest. Looking for a higher low, we can possibly play this re-entry zone with the stop below there. And if you're going for the long expansion, the stop goes there because that's your weekly higher low, where you're looking for the weekly expansion into possibly 53 again. And if you don't do it, sadly, this is going to be a weekly downtrend and monthly consolidation. So you definitely do not want to be a part of big monthly consolidation, similar to what we had back here. So if you are playing this one, try to play it on a pullback and play it carefully, play it small. If you take a look at Bros, I have no idea why Bros is up 6.3% today, maybe some analyst upgrades, but this one is very expensive, guys. It's very tough for me to play Dutch Bros overall, just because the valuation is so rich. So no trades for me, but the chart is not looking too bad. It's just a very wide, awkward range, right? Super, super, super wide range on the monthly right here. It doesn't look bad if you're holding, right? But initiating new positions up here at the current valuation is a little bit sketchy, yeah? It's trading over 100 forward price to earnings for a coffee shop. Keep that in mind, right? You're paying like Palantir, you're paying a lot of other growth name valuations for a coffee shop, yeah? The market cap right now is 11.5 billion. In terms of price to sales, you are paying roughly, roughly about an 8 forward price to sales, which is not terrible, but still, at the end of the day, it begs the question, how long can their growth expansion last? Not my favorite play in the markets, but I get it. Moving on further to maybe ASTS. We're only going to do a few more of these guys because the video is getting a bit long right now. ASTS could be the next one that's going to follow the Rocket Lab pattern right here. You're looking for the daily almost engulfing move. It's getting it right now. Any back test down here, 46 to 43, same thing as Rocket Lab. Looking for the new higher low, stop goes below there, and then you're targeting for the weekly expansion leg of this stock overall. Daily MACD, not looking bad, right? So any pullback short term could be it. And you're looking also for the weekly leg of expansion too, and just continuing on with a nice monthly push. So keep in mind those levels if you're looking to play ASTS. And I think that's pretty much it to the upside here, guys, because we've talked about most of everything else recently. I mean, we could talk about Decker's Outdoor Brands. I was saying I really like this company. Low 100s, 290. It's not too late to position. The profit target's all the way up here, right? About like 140. So keep that in mind. Stop loss would have to go below some of these lows down here, probably below 100 to about 95. And you're just going for the expansion of some of these names that have gotten left behind. The valuation at 114, we did it after earnings, guys. It was pretty decent. Under a 24 price to earnings, 1.57 peg, decent free cash flow yield. Not too bad, right? Decent risk reward trade. Talking about maybe SMR as well. SMR, decent bet for some short puts under the market here, guys. Low 30s, not too bad at all. Decent monthly consolidation right there. Not too bad. And if you're looking for a swing trade long without confirmation, so without waiting for confirmation, right? Well, if you're looking for it here or on a pullback, the stop loss has to go below there because the daily bears are in full control. If you get rolled over right here, you're heading lower, right? They engulfed on the weekly, and you might just be heading into more monthly consolidation. So if you want to avoid that, if you're looking to take a type of a swing trade, right, which is not the best, usually you want to wait for the daily uptrend. That way, when you get the break on the daily uptrend, you can get a stop loss and you can go for weekly upswings into the higher level. So if you're trying to do it without confirmation, if you're very aggressive like that, well, please make sure you set a stop loss around the lows or on some consolidation. Maybe you just prefer to sell some puts into the very large support area, which is 31 down to 26. So keep all of that in mind. That's pretty much everything, guys. I mean, we've been over many of the other names so far. We'll try to cover more tomorrow and we'll see what we get. That's everything I had for you guys for today's video. Hopefully you guys enjoyed. If you did, consider dropping a like. I would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these every Monday to Friday after the close. And last but not least, if you have any questions, always feel free to leave them down below in the comment section, and I will gladly answer them as soon as possible. Oh, sorry about that, guys. I forgot to show you the trades. So the trades, quite simply, let me just pull them up right here. The trades, I mean, is the portfolio open? I think it is. So I'll just show you some of the new trades that we took today, right? So some of the wheel plays that I was able to find today. Well, number one, you might remember that I'm assigned some CoreWeave. So we wrote some CoreWeave covered calls. We were assigned at 101. We got some covered calls for 2 weeks. For $2.10 at the open. Our assignment cost basis now, after being assigned and farming some premium to the downside, and now the covered calls, cost basis is $97.62. So we'll just kind of take it from there. 100 shares, we'll see how it works out. In terms of the other positions that we took today, BITX was telling you guys to watch out for this one on any Bitcoin weakness. We got a $47 strike for 26 cents, 0.5%, not too bad, and deep into the zone, right? Well, actually under the zone. 46 on BITX would be another sell-off from here on BITX of about 15-16%. that is another 7-8% sell-off on Bitcoin, exactly down into the zone that I want to be playing. So I will not mind being assigned there at all. Those are some of the plays that we took today for the normal wheel. We also have a Palantir trade that it took very early this morning. Palantir was down 5%, big sweeping candle. We got the 130 strike, which was huge, guys. 130 below the low of today. I mean, you would have had to have another sell-off here of about another 13-14%. That would have been 20% again for a week. So I took my chances with it, played out well. The bulls were able to buy the dip. We got 62 cents, and we were able to close that, you know, a few hours after. Not even like an hour and a half after that, right? 23 cents, 63% intraday. And I said, I'll take it. Nice little win. On to the next one. Thereafter, we played open door on some of the early morning weakness. 3.5 strike, short puts here, August 29th for Friday for 10 cents. This is like 3%, guys. The volatility is nice. So I'm going to sell a few of these puts at a time onto the market and see what we get. And last but not least, I have one new swing trade position, right? We Meta call debit spread right here, 785, 790 for October, paid $1.80. Stop loss closed below 730 and the take profit 785. It's exactly as I described on the Meta chart. If I'm looking for the expansion leg here, right? Well, 730 is a hard stop because I'm not going to sit through this into the further support zone. And 785, 790 is the target range highs. Small little call debit spread, just something. I'm not doing so many directional swing trade longs in this market because we know this market is very choppy. So we'll see what we get in terms of the rest of the portfolio. We covered it on Friday. We went through the whole portfolio rundown, but you can see we were down about 1% on the day in the portfolio. No other positions have changed. I did a full portfolio rundown of all these positions and why I have them on Friday's video. We spent like 15-20 minutes on it. So if you wanted to go back and make sense of any one of these positions, why I have them and where I'm riding them to, you can go back to last Friday's video. But there you go. That's the whole portfolio for the day. So hopefully you guys enjoyed today's video. That was it for me. And last but not least, in the event that you wanted to join the Discord, where I fire off all of these trade lives and where you can interact with me on a one-on-one basis, well, the link to our Discord is down below. Maybe you want to join a community of over 200 other members that trade the markets every day and that build very solid long-term portfolios, and you'll make a lot of friends along the way. You get access to all of my personal trades in real time, whether those are the wheel trades, the call option trades, the directional trades, right? Everything in between here are all the trades that we've made over the course of the past few months. The green little check marks are wins, the red little circles are losses, of course. And you also get access to our private morning live streams every Monday to Friday for about 2-3 hours after the open. I trade live, and then I take all your guys' questions on your stocks, your options, your long-term portfolios. And you can also ask me all of your questions all throughout the day in our chat rooms. You also get access to our private video educational section where I go through technical analysis, fundamental analysis, things that let me see what I see on the charts today, and why I trade in the way that I do. Also, option strategies that I don't put so much on YouTube. A wheel strategy for large accounts that a lot of our guys in there with big accounts do follow, because yes, there are many variants to the wheel strategy, and there's one that I've never posted on YouTube, but that I use for my own very large account as well. And other options trading strategies as well. How I pick my leaps, how I pick my call debit spreads, credit spreads, all things of that nature. Tremendous educational section in that Discord right there. And last but not least, you get to copy paste all my charts and all my watch lists. If you guys enjoy my support, my resistance levels, and you just do not want to do them on your own, and you also do not want to do all the earnings recaps on your own, you can just copy paste all my charts. They become yours in just 10 seconds. You can just copy paste everything and you end up with the exact same setups as me. Just an added bonus for our Discord members. Anything of that interests you, the link to join the Discord is down below in the video description. Hopefully I get to see you in there soon with our community. And if not, I will see you right back here on the channel. That's it for me. Have a great rest of your Monday evening, and I'll see you tomorrow after the close. Peace.